Hey everybody, this is John, and Happy New Year. So let's dive in and kind of take a look at this. The markets started off strong. Futures were strong overnight. They gapped up, and this spider chart doesn't quite do it justice. Let's look at the S&P futures here that shows the 24-hour action. You can see that, nice little gap up. At one point, S&Ps were trading as high as almost 2260. And then if we look over here at about a 30-minute-ish chart, you'll see that gapped up, had a nice little strong move, and then at one point it kind of looked like we were due for some correction, and then you can see we got the RAF buy signal there on the S&Ps, and then we got a nice rally into the close. And so the question, as always, is kind of like, all right, now we got the first trading day of January under our belt. What can we expect next? The first thing we want to look at is today was a really nice day in terms of the tax loss selling. So for those of you that participated in our tax loss selling class on Friday, and this is a very specific phenomena where we're looking for a specific pattern of specific stocks to buy them on the last day of the year where we expect a bounce the next day. And you can see here Fitbit, that was one of these. We bounced 8% today, almost 9%. That's obviously not a normal move, but once a year, this is what happens, and these are the kind of moves we were focusing on. And Fitbit, of course, was nice because it's perfect for a small account. So we bought some of the $6 call options, and not very many of them either, and that was good for $1,000. Ended up making almost $2,000 on the day on that little bounce on a very, very small investment. I did keep the naked puts. We did buy some naked, or sold some naked puts on it just to collect the premium, and at this point expecting a little bit of premium erosion each day. From there, another stock that met the criteria was Gilead, G-I-L-D. This one still has a little bit more upside, so we're keeping this one, but it's been a great solid bounce. And then everybody's favorite VRX definitely met the tax loss selling criteria. We've got some stock and some call options, and we sold some puts, and with the expectation that we're going to continue to get a couple more days bounce in that stock. The couple other ones we did was Oak Capital Group. That was another one that fit the criteria perfectly. We flipped that one out today, and essentially the only one that was kind of, I would say, kind of boring was GoPro. So we did that one as well. And you see it was good for $200, but it's good. We can go take the office out for Starbucks. So overall, very, very solid. Again, that's something that we do every year, looking for that specific setup and then flipping them out day one. Great way to kick off the year. So from here, what about the rest of the market? So the NASDAQ futures, or the NASDAQ, again, started off strong, saw a lot of weakness, and just kind of closed what I would call meh. We've got really kind of this overwhelming sense of selling in the markets in general, especially like on the weekly charts. And so the question is are we going to be able to start to rally out of the gate? Now, obviously, I'm not really interested in betting too much against this market. It's just that when we come back and we look at a weekly chart, remember, markets always revert back to the mean. The Qs are queuing up here, but do we need to at first come down and really get a solid test of the mean, which on the Qs is $1.50 below where we are right now, and on the spiders is actually a whopping 5 points, a little more, 6-7 points away from where we are now. To put that in perspective, it's a 60 or 70 point drop in the S&P futures. Now, that doesn't mean we're going to slam down and test it. It just means that on the bigger picture, we are getting sell signals. We are far away from the mean. And in January, at least for the last 3 Januaries, we have actually seen violent sell-offs back to the mean before a resumption of the uptrend. So it makes me a little wary on the long side, but not super excited about the short side. Okay, so what do we do in a situation like this? Well, look to the dollar. I mean, the dollar here continues to be super strong. There are some positions here that we can take in FXE and a couple of other positions that I'm going to talk about in the premium newsletter. Okay? Okay, so that's what I got. And just a heads up, we've got a free webinar coming up. This is a first come, first served free webinar on Tuesday, January 10th. So still got plenty of time. That's not until next week. But again, first come, first serve. So if you see this and it's like, all right, a free webinar, that sounds good, I would encourage you to sign up now. I'm going to be talking about essentially the next 90 days. Okay, there's obviously a lot of controversial new policies and procedures coming online. I want to talk about how that's going to impact the market. So we're going to be looking at some big picture stuff, plus, at least from what I'm seeing and what's already been working this year, some shorter term strategies for generating income out of the markets. Again, this is going to be simple strategies, but some new tools that I think you're going to like, and they're going to be a lot of fun. And we'll talk about this all on next Tuesday, or this January 10th. All right. You go to simplertrading.com/shift, claim your spot, and you'll be ready to go. All right, looking forward to talking with you guys then, and gals. Have a great night, and we'll see you at the next update.